One simple technique to share with you right now is you can use a tool like a moving average. So I'm going to pull out the simple moving average indicator, demarcate by this blue line. Okay, so this is the 100-day moving average. Click OK. And so what this means, right, is that you can actually continue holding your position. Okay, so you can imagine how difficult psychologically this can be when the market moves in your favor, go against you, moves in your favor. So when you take a portion of your position out in profits, psychologically it's going to be much easier to handle. So now it's a low volatility environment and we want to look to do business at this area of support. But as you know, right, on a daily time frame, it can be difficult to time your entry at this area of value. So what we can do is go down to a lower time frame to time our entry. So for this basic price action strategy, we are looking for a few things. Number one, we are making sure that the market is in an uptrend. Okay, so you can see over here the price making a series of higher lows, higher lows, higher lows, higher highs, higher highs, higher highs, and pretty. When you see such trading opportunity, please tell me, right? Sometimes I might even miss these opportunities out. So if you see it, please tell me, drop me an email, let me know, Rainer, this has multiple stack area of value, pay attention. Thank you, I would appreciate that. Yeah? At this point, right, does this look familiar? Well, it should be, right? Because this pretty much is the same concept or same strategy that you've learned earlier. We're looking for price to retest this area. Number one is what we call the hammer. That looks something like this. The second one is what we call a bullish engulfing pattern. So the price, let's say, comes down lower, then there's a red candle over here. Then what happens is that for the bullish engulfing pattern, the next candle, look at this blue dot over here. Okay? Alright, the first trading day of 2022, you already know that this is the previous year low. And you can project it way ahead of time. This is not a lagging indicator, this is like a future projection, right? All the way ahead of time. So again, okay, so let me just remove this box over here to declutter things. So when it comes to stop loss, there are many ways to do it. There are traders who like to set it just below the lows because they think that, hey, if the price reaches this lows, the trade is invalidated. I want to get out of the trade. So volatility in the market is very interesting. It's not static, right? Volatility in the market has a cycle, right? It moves from a period of high volatility, right, where the market, is so crazy every day, and then it gets quiet, for weeks or even months, and then boom, right, volatility again. And I prefer to get in at a slightly better price. So what I'll do is I'll usually have a buy limit order to see if I get filled or not. If I get filled, great. If I don't get filled, never mind, I'll move on to the next trade. So let's say I place a buy limit order somewhere here. Let's change this to green. Okay. So again, this is a cherry pick chart. You can see that the market consolidated a while before reaching our target, right? And in this case, it then continued to rally up higher. So you can see that the concept of swing trading that I'm trying to share over here. Why? So now that we have identified our area of support, area of value, the next question is, when exactly do we enter the trade? There are professional price action traders who just have limit orders. They blindly just enter from the area of value. But for me personally, I prefer